What is going on, everybody? In this video, we're fighting a state of the market and stock picks for February 23rd, 2023. So that sounds like something you're interested in. Consider subscribing as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. All right, all right, all right. So today was a big day to kind of get a little bit of insight into what actually happened in the last essentially monetary policy with the Fed. Considering that we don't have another core till the 14th of next month, and then another monetary policy on the 22nd of next month. So we are very data dependent on what is going on, and something that the Fed has essentially told us that we need to be watching and paying attention to, as it will they will make adjustments as necessary. Now, up to this point, after that monetary policy, the week following, you had Bullard come on talking about a 50-point basis move. Last week, he mentioned a 50-point basis move, and we got Bullard again tomorrow. But today, we did have the FOMC meeting notes, and in there, they were talking about the 25-point basis move that they would essentially come and start the year out with. There was a few officials that did favor raising it to 50-point basis move. Now there's questions with a lot of different reports starting to get hot in that if we do start running into the next core as far as inflation, we could very well favor a 50-point basis move. And so the market is didn't like that so much. The market really didn't know how to take that initially when that report came out. Um, the market's been, I think, trying to price in 50-point basis move. And something I've talked about, people could say it's priced in, whatever the case, but the market has to hit a level before it's quote unquote priced in. Right now, what you quote unquote have priced in is a potential pivot. That's why we ran all the way up to 4,200 and essentially stalled, because the theme of what was making us run about a potential pivot has essentially died and is continuing to die each and every day with new reports of an inflation rising. Wells Fargo is continuing to lay off a huge housing sector over the past week, is what they're doing. And so these essential layoffs are going to continue as long as rates are high. And we know that these rates are going to be prolonged at least at 5% for the remainder of the year. I'm thinking it's going to be more. I'm leaning more towards potentially 6, if not more than that. It really depends on if inflation starts to run. If inflation starts to run, then we could potentially be looking at 75-point basis moves. But let's not get ahead of ourselves. Let's wait to the next core. Now, again, these reports have been altered, and they're pretty much down to the point to where they can't really alter them anymore, as normal numbers are going to start showing. But the thing is that our inflation is a lot higher than what's actually reported. And so by altering and taking out what really matters, you're not getting these huge numbers. Inflation is still really bad. Again, something I've always said, all you got to do is take a trip to the grocery store, buy gas, and pay your rent, and you know exactly inflation hasn't gone anywhere, and it's getting worse. So with that being said, yes, you'll see disinflation with all other things because people are just trying to live. Now, being said, something I was concerned about up to this point is the fact that things are getting worse. And if inflation starts to run, these higher inflation rates are going to essentially create, force the company's hand to start laying off even more and working with bare bones. And then again, a lot of people aren't wanting to come back. A lot of people are working gig economies. A lot of people are working 3-4 jobs because they just can't. There's no point just having a job if you can't even get paid to deal with inflation. And so people just aren't willing to transport and go to work and sit in traffic and then come home and work 8 hours. So people aren't willing to work these number of hours if their wages aren't over inflation. What is the point? You're essentially working for free at that point. So people aren't willing to do that. But yet, they're willing to sell whatever they have, assets they've acquired over the past 2 years, take out HELOCs, whatever they have to do, till in hopes that this time passes quickly. So there's a lot of hopium and things pumping back quickly, but I have to realize that this is going to take a while to play out. Yes, I do think we can come out of recession quickly, but coming out of recession quickly can mean 2 years. And I still think we're going to battle inflation. Something I said the other day is that they're projecting inflation go down to 2%. It was July of next year, but now they're pushing it out to the following year, 2025. So that is concerning. And then again, if inflation starts to run away, we have to see how hawkish the Fed do get in the rate increases that they do start laying on after that. So with that being said, let's look at what let's kind of look over what we have for tomorrow. Tomorrow's another big day. We do have quite a bit of data coming out tomorrow, and some very pivotal. Obviously, every Thursday you're going to have jobless claims. That is going to be important as people are trying to gauge where that is at. But we have GDP tomorrow. It's going to be very important. PCE is very important tomorrow. Again, a lot of these data sets that I said didn't really hold weight, they hold weight now again, because again, every time we're trying to gauge what's going on with the Fed, they will hold more weight, especially when you have this long lull period before the next core and before the next monetary policy. Data sets are going to hold a lot more weight because of that. And so expectations are pivotal, because if they're off by expectations, you're going to scare the market. And so this is why you've seen expectations even for earnings be extremely low, so you don't scare the market. The market at least says, oh, well, they're on par, so that's good. And so we've had a lot of really shitty earnings, and the point being is that their expectations were really low. So if they would have been put at a different standard, right, things would have looked a lot worse than we are. We would have had a lot more selling, a lot more panic. But if you can kind of gauge that expectation, well, we know it's going to be bad, so let's just put expectations really low. If we miss that and do well, then that's a positive sentiment. So that's kind of what the way the market's been playing right now. But again, the overall sentiment is things are bad, and they can't hide that anymore. Again, you're not trying to introduce panic into the market, because mass panic, you have no control when there's mass panic. And so the Fed, the media, everybody is trying to play this tune that everything's okay. We're in a growth recession, to try to keep the masses calm, because a lot of people can't deal with stress. A lot of people can't deal with these elements. And so if there is mass panic, if you pretend like everything's okay, yeah, the average person's going to know, no, something's wrong. But because it's not omitted, right? Like it's, you're not going to stir that panic, right? And so if you just said, no, it's bad, then people are like, oh, no, it is bad, and I just got confirmation, and right. So you don't want to do that. So we won't hear that we've actually been through a recession or we've been through a depression till after, in the fact that we've recovered, will that information actually come out. So anyway, I got a lot of day sets tomorrow. And then, like I said, we have Bostic tomorrow at 10:50. Again, his words have been holding a lot of weight lately since he's been favoring the 50-point basis move. So we'll have to see. We have 8-week bill auctions. It's been really critical too, because last night Japan had an emergency bond buying as well. Now, this is something they've been doing like 2 or 3 times already. In the fact that these emergency bond buyings has been happening a lot and frequently, is holding the market up from potential collapse. So that's the things you have to pay attention to. The Bank of England did it a while back, but Japan has done it a couple different times. So we really have to be careful about that moving forward. Nonetheless, and then we'll have Friday, we have the PCE on Friday. So we're finishing out the week with a lot of data sets on top of the Fed raising rates. So the realization and the things that we talk about here are starting to come to fruition, and people are not liking that. People are hoping for a pivot, and it's getting crushed. And now people still are even talking about, oh, well, it could still potentially be good. It's not going to be good like this. You need to just let this happen. Let it be over with. And something I said, I'm a permabull. Let this just be over with. Let it happen. Let normalization occur. Let's get back to normal as fast as possible. But again, you're going to have a normal upswing in purchasing right now. And so we just have to kind of let the cycle play out. I know patience is not it's not the greatest thing, but you have to understand that, for 2 years we just ran up, and you have to understand that this is not going to uh, just correct itself in a couple months and then ultimate bull market again. That's just not going to happen. 40% of the money supply has been printed, right? These are consequences for doing that. And so nonetheless, to think that we'd pivot, I think we can pivot quick, but I think we still have another year and a lot of pain to go through before that happens. So anyway, nonetheless, key levels tomorrow. Something I talked about even coming into these past couple of days is we had all this support, but we straight just pushed through it. I mean, it wasn't a sheer quick break, but we haven't bounced. We've just slowly been slicing through the support, and then now we're underneath. We find ourselves underneath, closing underneath the monthly and weeklies. We did bounce out the 50 weekly, but my thing is if that data is bad tomorrow, and you have Bostic talking about a 50-point basis move again, I think we're gonna easily break this 39.70. If we do break the 39.70, we got a big dive back to 3,900 after that point. So tomorrow is going to be really important as far as all the data sets. Again, we are seeing hot inflation. If we continue to see hot inflation, the market's going to be panicked that the core is going to be worse. If the core is worse, then that means the Fed are going to have to go back to at least a 50-point basis move, if not a 75-point basis move. So the more, if it's a 50, you're going to introduce a lot of shock. If we have a 50, I think we hit 3,800 pretty easy. 75 points, I think you're potentially looking roughly around that 3,600 again. So those lows of last year, close to those lows of last year, you're going to start revisiting that, especially if inflation starts running away. That's big enough catalyst to make a sell off. It's not going to cause a crash, but it's going to cause a slow grind down and a painful grind down because of what's going on. And then that's not just talking about what could crash the market is, this financial system folding, right? In some other bigger catalyst that could expose itself with this battle between inflation and high interest rates and the consumer getting pinched. And so this is what's concerning, and these are the things that we talk about. That's not even including what can happen with Russia and China in another war. It's going to be an issue. So with that being said, we will watch that tomorrow. On the downside, the upside, bulls, to be honest, you really need some positive news. This thing needs to break back over the 408 and hold over 408. Potentially, it's going to be a struggle to even break back over 4060. So again, there's essentially been no breaks on the way down. And again, if we get more bad data tomorrow, that's going to continue to feel us down at least to the 3,900, and then we'll see. Maybe we chop around 3,900, waiting to see what happens with the next monetary policy. If we continue to get this belief in pricing in of a 50-point basis move, maybe we start dropping down to the 3,800 is my opinion. I think by the time we hit monetary policy next month, I think we'll see ourselves down at 3,800, and that's if we don't get a black swan. We get a black swan, then we're seeing new lows, and so that's something you have to consider and be very mindful of. But nonetheless, we'll see the dollar. The dollar again, it needs to break over 105 for the bears to have a chance. The bulls, you want this thing again, like I keep saying, you want this thing under 100. Again, if there's continue to run inflation and everything like that, this dollar is going to continue to gain strength. So it'll be interesting to see what happens with the dollar there. Bitcoin still looking pretty strong and pretty solid. It does need to break over essentially this 26K mark. It could potentially go to 30K. Again, if inflation is a problem, Bitcoin was essentially deemed a hedge against inflation on the first go around. Now that all the FTX drama and everything's kind of been ironed out, we might see it being the new gold and the new hedge going against inflation. See if that theme continues to press, if crypto is going to be the new hedge against inflation. So we'll have to watch this, something I really want to kind of see moving forward. But like I said, we'll have to see how that does play out. Tesla is still remaining strong. Again, if you're a Tesla fan and want this thing lower, this thing needs to break essentially the 175. Again, if inflation concerns and 50-point basis moves are talked about more and actually being priced in on a higher level, this thing can very well butter through this support and start selling off. It's had a big run, so you get a lot of FOMO. People still trying to run in and buy Tesla at these high levels. But again, it's had a parabolic move. It's going to retrace at least 50%, at least down to the 150 before this thing is said and done. And again, if we start feeling to the downside, it's all you need is one break for Tesla. And then once it starts really getting some gas, it starts selling off pretty heavy. So we will watch that. Bulls, you want this thing to break over 214 and hold over 214. If it can't do that, that's going to be an issue. So we'll see what happens. You get a lot of FOMO buyers right now. You don't want to be buying at this level with these parabolic moves because that's just not. You want this thing to pull back at least 50% before you even consider buying back in. Again, not financial advice, but that's what you need to be thinking. BA, it's starting to break down, needs to break essentially the 203. If it can break 203, looking at the 188 potentially around here. Pretty solid support around the 177. Again, it hasn't really back tested these levels, so it could straight butter through these. You could get an initial bounce and then kind of dead and then roll over and continue selling. Again, it really depends on what the overall market sentiment is, but value in financials have been holding us up a strong part of the end of last year. And then now that tech is caught up, it's time for everything to roll over. So we will see how that does play out there. JPM, so the banks, same thing. Banks need to hold, JPM needs to hold 137. It breaks that. The next support you got is 129. It breaks that. You got a pretty big drop, essentially roughly down to the 120 mark. I see GPM being here in at least another month or so around 120. I think is a very strong possibility. Again, you're going off of strong possibilities, right? And I think that's something to understand when you're talking about the market. You aim for the higher percentage possibility. You don't aim for, well, this thing's just going to keep going up. And why would it keep going up? There's no momentum to the upside, aside for hopium that things are going to get better. You've kind of run out of that steam. Earnings are done. You're out of that window. Things are bad. Something we talked about, things were going to be bad. And it's Q4. This is supposed to be one of the biggest earnings that you typically see, right? Because you had Christmas and everything Q4, and it's nothing is bad. And so Q1 reporting is going to be really bad. You're going to see more layoffs and stuff introduced into Q1 earnings when we get in the next earnings cycle, which will start reporting in April. That whole cycle will restart. And then you get big banks and you'll get big tech again, kind of see where they're standing. Again, Q2, I think it's going to be probably one of the worst, if not Q3. I think where you're going to really start seeing a lot of damage around that time, especially if inflation starts to run away. That's going to be a big concern. And depending on what rates are being adjusted along those routes as well. So I think Q2 and Q3 are going to be some pretty nasty earnings. But again, we'll see. Wait and see how this thing does play out. But essentially, that is pretty much what I got. We want to see what the data set is tomorrow. Again, if you don't follow me at Hemi137, I do daily updates there every day in the morning, in the AMs before pre-market, and kind of give you an idea of what I'm seeing, what I'm thinking for the day. And then we go from there. So check me out there, and I'll check you out on the next one.